the big mega banks like Goldman Sachs and Chase Manhattan Bank and so forth, took very risky bets and almost went bankrupt, and the government and the taxpayers had to bail them out. And you would have thought that after that, they would have lost a lot of their power, as the big banks did after the Great Depression when they crashed the economy. But that didn't happen. After that, they bounced right back, and now the big mega banks are just as powerful as ever. And so I was looking into how can that be? How can the big banks remain so politically powerful and so economically powerful despite crashing our economy every 10 or 15 years or so and getting bailouts? And the answer I came to is that it's not just the banks that are powerful, but they have a whole collection of allies that help them sustain their power. And that includes politicians who they give campaign contributions to. It's the lawyers who find loopholes for them to get through. It's economists like my profession who come up with theories that say, oh, they're all the best in the world, so just don't regulate them. And it's other business people who support the banks. And so when I say busting the bankers club, I'm saying if we want to really create a financial system that works better for the rest of us, we really have to reduce the power of this whole collection of politically powerful groups out in society.
Welcome to the Bitcoin Source, your ultimate destination for all things Bitcoin. I'm Dadu, your host, and today we're thrilled to present Gerald Epstein. Gerald Epstein is the author of Busting the Bankers Club, Finance for the Rest of Us. He is a professor of economics at the University of Massachusetts Amherst. His research and teachings concern domestic and international finance, macroeconomics, and central bank policy. Welcome, Gerald.
Thank you very much for having me.
Likewise. Gerald, this is your first time here. Let's start from the beginning, and I really want to get into the exploration of your book. So, Busting the Bankers Club, can you elaborate on what led you to choose this title, and what messages do you hope your readers, especially those interested in Bitcoin or economics, will take away from it?
So what got me into this was the great financial crisis of 2007, 2009. And I noticed that in that crisis, the big mega banks like Goldman Sachs and Chase Manhattan Bank and so forth took very risky bets and almost went bankrupt, and the government and the taxpayers had to bail them out. And you would have thought that after that, they would have lost a lot of their power, as the big banks did after the Great Depression when they crashed the economy. But that didn't happen. After that, they bounced right back, and now the big mega banks are just as powerful as ever. And so I was looking into how can that be? How can the big banks remain so politically powerful and so economically powerful despite crashing our economy every 10 or 15 years or so and getting bailouts? And the answer I came to is that it's not just the banks that are powerful, but they have a whole collection of allies that help them sustain their power. And that includes politicians who they give campaign contributions to. It's the lawyers who find loopholes for them to get through. It's economists like my profession who come up with theories that say, oh, they're all the best in the world, so just don't regulate them. And it's other business people who support the banks. And so when I say busting the bankers club, I'm saying if we want to really create a financial system that works better for the rest of us, we really have to reduce the power of this whole collection of politically powerful groups out in society.
Yeah, there's books coming out now in relation to economics. Like Hayek is one of my favorite economists. And like when you think about Bitcoin or blockchain technology or cryptocurrency, this has been this kind of new technology that's been upending the financial markets, the financial systems. As you can see with the Bitcoin ETF, it's kind of been just like, you know, tons of great news about, allocation and profit and things like that. But because you're kind of like a veteran economist, Gerald, it's always very insightful to hear kind of the flip side of the coin, someone that has a lot of experience in this space of, exactly what do you think about some of these newer technologies in the case of like financial inclusion, right? So in your book, you talk about that heavily. And I kind of wanted to spin this into Bitcoin a little bit. And of course, we have all these different financial tools. Bitcoin is often touted as a tool for financial inclusion. how does your book address the issue of inclusion in finance, and do you see Bitcoin as a potential solution to some of those barriers to entry, like you would see in the financial markets?
Great question. So yes, as you said, we have a lot of problems with our financial system and our economy generally marginalizing groups of people, poor people, people of color, communities of color, and so forth. And this is not just a problem in the United States; it's a problem in other parts of the world as well. And so the question is, how can we have a more level playing field? How can poor people and people who've been discriminated in the past and continue to be discriminated against, how can they have the same kind of access to all kinds of resources, and including financial resources? So, we have banking deserts if you go uh, into cities, and just like we have, food deserts in these places. How can we can make sure that people have the same access? Bitcoin and other cryptocurrencies have been touted as currencies and assets that can create financial inclusion. My book is a bit skeptical about that, uh, partly because these kinds of financial assets are not they're very opaque. It's not clear how they're working. They're very volatile. They go up and they go down. I think there's a lot of evidence that people who invest in these hoping to make a lot of money uh, sometimes lose a lot, and they don't really know what they're getting into. What I argue for in my book is a type of financial inclusion that will be more stable, that will be more transparent, and I make an argument for more community banks in these banking deserts, uh, and more public banks that are created by the communities themselves, and that are made available at low cost and with good resources to people in these communities. I'm not saying there's no role for Bitcoin, and we can talk about that more. I'm just saying that as a tool of financial inclusion, so far at least, it hasn't worked very well because it's so volatile. So many people have lost money and even been ripped off by some of these entrepreneurs like Sam Bankman-Fried and Kai Daiwan and people like that. And so far, it hasn't lived up to its promise.
Yes, and I'd love to kind of expound on that. And I don't want to necessarily say I give pushback, but I definitely want to give some insight on the whole financial inclusion kind of conversation. So, Bitcoin has been around since 2009. So, in the realm of the financial instrument world, that's still relatively young. And there's still not a real metric or litmus test to really see like how much of financial inclusion has cryptocurrency or Bitcoin in particular has done. But I know that just from the space that I've worked in, the people that I've seen it impact, I definitely would say that it is something that is slowly but very quickly becoming something that a lot of the underbanked or unbanked populations around the world can utilize to actually change the direction of the way that they approach financial instruments. And we can always challenge the notion that traditional banking systems are the only means of achieving financial inclusion, but that has been proven wrong time and time over again. Redlining, discrimination when it comes to loans, having a certain particular credit rating, living in a certain particular neighborhood, because of the decentralized nature of Bitcoin, that kind of removes all of that red tape and it allows people that might not necessarily have a social security card or a perfect credit score or even the understanding of traditional economics, buying, selling, just the things that you're very well versed in, Gerald. I think that there's a lot of people coming from other places, other communities that have no idea of how those things work. Bitcoin kind of comes in as this hedge, like it's been a hedge for inflation, for example, to help a lot of those people come out of those situations and find a different solution than the traditional banking system, which, of course, we've seen the mortgage crunch, and even if we go as far back as the Great Depression, you've seen these different generations kind of lose faith into the traditional banking system, and then they found these other outlets to actually find a way to have sovereign wealth. So I just wanted to make that point.
Yeah, no, I think that those are all really interesting points, and I do want to talk with you about that. And there's something about the whole movement of cryptocurrencies and bitcoins that my book is attuned with. That is, my book is very critical. Busting the Bankers Club: Finance for the Rest of Us is very critical of of the two same things that the crypto movement I think is critical of. Number one, the traditional banking system. The traditional banking system has not served people well. It hasn't served the middle class, people very well, and it certainly has not served marginalized communities well at all, as you said. And it's very critical of the government because the government, too great an extent, has been part of the bankers club. If we look at the way in which the government has bailed out the big banks, or the way in which the government has to regulate the big banks to make sure that they operate in the public interest. So I think you can correct me because you're more in this space than I am, but my understanding of a lot of the ideology of the crypto movement and the Bitcoin in particular is kind of a pox on both your houses, a pox on the traditional banking system and on the government, and we're going to have a third way that's really going to work better for us. And I'm sympathetic to that idea. However, and my book is quite critical of the cryptocurrency, just to be clear. And so let's just break it down. So, what kind of financial services do people need, particularly people in marginalized communities, but just people in general? Well, they need a stable currency that they can use cheaply to effectuate transactions. They need to have a place where they can safely store their savings and whatever wealth they might have. They need a place where they can get loans if they need it without being exploited with outrageous costs and so forth. So let's just take those three. And they also need, I think, financial education. If people don't really understand how the financial system works and what kinds of investments to make, they need some kind of financial education that's objective and not exploitative. So if we go through those functions and those things that people need, a question that I have, and you can probably onto it, is to what extent does cryptocurrency in general and Bitcoin in particular satisfy those needs? So number one, is it a stable monetary value? No, Bitcoin is very volatile. It crashed a couple of years ago. Now it's booming again. It's very volatile. How easy is it to use to effectuate transactions? Well, it's really not very easy to use it as a payment in a payment system. There are stable coins that are connected to it, but then that uses the traditional banking system. Number three, can you get loans from Bitcoin at cheap prices and so forth if you need them? If you have a family emergency or something, not that I'm aware of. And finally, is it a safe place to store your wealth? Well, there's been so many ripoffs and there's been so much instability. I would say it's not. So I understand the critique of our financial system and of the government's role in it. I'm totally 100% with people on that. But so far, at least, I don't see cryptocurrency as really as a substitute for and as an answer to those criticisms. But I'd be interested in your perspective on this.
100%. And for my audience or people that might be flummoxed on exactly what Professor Gerald is talking about, we've seen this time and time again with like the battle between the Austrian economics and traditional economics, and then the kind of paradigm shifting way of approaching Bitcoin or other blockchain technologies. And I just wanted to go over a few things, Gerald, that you mentioned, kind of pertaining to me answering this question. So when you look at an inflation hedge, right? In the face of unprecedented money expansion, we've seen during the pandemic that the money has been expanded at a rapacious rate. That's just been kind of like insanely high. Bitcoin has been increasingly viewed as like this hedge against inflation. Predefined scarcity, and when you're talking about predefined scarcity, you're talking about a cap of 21 million coins, which cannot be altered, capitulated, or changed. These things kind of contrast with fiat currencies that can be printed without limit. And I think that you as an economist, you're aware of this, that unprecedented printing is why a lot of people have been jumping towards Bitcoin, because they at least know that they're dealing with a finite, scarce digital asset. And I think that the traditional markets are really scared of anything digital. They want tangibility. They want things that are kind of like provable. Like when you look at gold as a form of sovereign wealth from back in the days, that was something that you could physically hold in your hand. You used to see the old cartoons where they would like bite the gold coin to prove if it was soft, to prove that it was real. I think that Bitcoin has done that in a 2.0 version where you can go onto the mempool, you can go onto the blockchain, and you can see every transaction is completely public and transparent. If you really wanted to, you could go in and prove through proof of work that these things are actually tangibly there. There was a few other things that you mentioned where you talked about Bitcoin loans, which is something that I definitely want to elaborate on. So to clarify, it is possible to get a loan using Bitcoin as collateral. A lot of people don't know that; they're not aware of that. It's becoming this increasingly popular service offered by a number of different platforms. I won't like show them here or push them here, but um, I'll give you an example. So, similar to traditional loans, you might use as something to get a house or a car as collateral, right? A Bitcoin-backed loan will allow you to borrow fiat currency like USD, Euro, or other cryptocurrencies like USDT or some of these other ones, and you can definitely take that, but you must not have the ability to sell and access those liquid funds. So there's platforms that are offering those loans. I'll give you an example. So there's numerous platforms causing this kind of like stir in the market where decentralized finance, DeFi, has become this big like kind of like namesake that people have been using. And a lot of these traditional institutions are now offering Bitcoin-backed loans, such as BlockFi, CS, Nexo. One of these new guys coming into the space. You can even see like a BlackRock or Fidelity. They're on the ETF side of things, but if you're well aware of economics, you know that eventually, once they get enough capital, they get enough allocation, that they'll start offering these type of financial instruments as well. So I definitely think that those things are coming. You have loan to value ratios when you're looking at, which is critical in Bitcoin backed loans. So it represents the amount of loans compared to the value of the Bitcoin collateral. So for example, if you have $10,000 worth of Bitcoin and the platform is offering a 50% loan to value ratio, you can borrow up to $5,000 of that, vary the platform, and then you can effectively manage your risk in terms of the loan that way. Versus in a traditional setting, it's based on your credit, it's based on your financial history, and also in some cases networking, right? Like how much are you favored in the market, whether it's your demographic, your net worth, your ability to produce income. These are all tangible things that are happening in the traditional market that kind of box a lot of people out, versus Bitcoin gives you a more open understanding of the interest rate, to value ratio, and also the risks, right? There's no credit checks. There's different levels of tax implications when you're looking at, in some jurisdictions, borrowing against your Bitcoin instead of selling it can have different tax implications, potentially avoiding some of those capital gains taxes that you might receive dealing with the traditional banking market. Of course, a lot of people have used that to quote unquote evade taxes or get into the space of doing scammy behavior. But I think as this asset becomes more ubiquitous in the space, more companies like Fidelity, BlackRock, I Trust Capital, and then you have the alphabet institutions like the SEC, Gary Gensler being very close watching of what this asset is doing. I think that those risks are going to slowly be mitigated, and the traditional systems will actually embrace Bitcoin as time goes on.
Yeah. So let me address the last thing that you said, and I think that you're right. If I looked at the history of the financial system after the Second World War and the fights over financial regulation, which ultimately led to the ending of the Glass-Steagall Act and the financial deregulation under President Clinton, and when Alan Greenspan was chair of the Federal Reserve. This happened in 1998, 2000, and so forth. And prior to that, Congress could not agree on this general deregulation, and it was because there were all these fights among the financial segments between the big banks, between the big commercial banks, the big investment banks, the life insurance companies, the smaller banks. They're always fighting with each other, and each of them had their own allies in Congress and so forth, that would block any kind of big change. The only way that there was some big change in deregulation was when they finally all got together, and the way they all got together was the big banks pretty much won and convinced all the other ones to come along, Goldman Sachs and the Citibank and Bank of America, etc. So I kind of see the same thing happening now with Bitcoin and cryptocurrency. As you said, there's all this fighting among the regulatory agencies, between the CFTC and the SEC, Gary Gensler versus Rostin Benham and so forth, and there's a fight about who's going to have jurisdiction. And in Congress, there are people in favor of less regulation and people opposed to less regulation. And this SEC decision to allow these Bitcoin ETFs, I think, was a major step, showing that the big financial institutions like BlackRock and Vanguard and Fidelity and all of them are finally going to accept the idea of Bitcoin and cryptocurrencies being more connected to the standard financial system, but only because they think they're going to dominate it, only because they think they're going to control it, only because they think they're going to be at the top of the heap. The point I'm trying to make is, I think a lot of the people who have, and you've said this, who've been so interested in Bitcoin and cryptocurrency value the idea of it being a decentralized system, it being a system that's outside of control by the quote unquote big boys, the big banks and the big financial institutions. And I think to the extent to which the way it's going to develop in the future is that it's going to get more and more controlled by the bigger financial institutions, and it's going to lose a lot of the rationale that many people have had for it being, small, decentralized, dependent of the banks and independent of the governments. And so to the extent to which it really is going to develop, I think, it's going to disappoint a number of the people who really wanted a more decentralized system. So I don't know what you think about that, but that seems to be the way to me that it's going.
Yeah, I don't agree. I think that as time goes on, I mean, there's actual features in place inside of the Bitcoin protocol, and what people have to realize too is that this is essentially living, breathing, evolving software or code that's kind of gotten into this place where um, the decentralization is only going to get bigger as more people buy into the network. So we can use Michael Saylor as an example. He's a billionaire, owns MicroStrategy. He used to be the CEO, but he stepped down to kind of work more on Bitcoin. And when you look on the traditional financial market side of things, um, he has to keep his shareholders happy, right? And he has MicroStrategy stock. A lot of that money has been produced by putting Bitcoin on the balance sheet. So every time you look at the news, he's buying more Bitcoin, he's putting it into the balance sheet so that he can kind of suppress the tax implications and also keep shareholders happy when they look at the portfolio and that they see that all of their stock markets are rising because of Bitcoin rising. That makes shareholders happy and it makes the stock price actually become more stable. It's the same concept with looking at these different implications between like macroeconomics and microeconomics. So from a macroeconomic perspective, and this is kind of a question for you, Gerald, what are some of the potential implications of, a widespread market crash, or you're seeing this massive printing? I think just recently mentioned that he's trying to pass a bill if he gets back in as president to, I think he has a budget of like $3 trillion for the next 4 or 5 years. We're already massively in debt in the trillions right now as a U.S. economy. So how do you think that might impact traditional economic indicators and policy decisions with things like Bitcoin kind of coming into play, but also this massive overprinting that we're continuing to see in the market?
Well, you keep talking about this massive overprinting, but I just don't see it happening. That is, you talk a lot about this massive increase in inflation, but in fact, what happened was we had a bit of a blip in inflation, went up to 7 or 8% from close to zero. So that was significant, but it wasn't due to the increase in the money supply. It was due to supply side shocks from the COVID crisis, disruption of supply chains, the war, Russia's invasion of Ukraine. And once those, at least the supply chain problems got resolved and so forth, prices have come way down to about 3%. I know the Fed has this 2% inflation rate target, but it's completely arbitrary. I mean, it doesn't. Why does it have to be 2% or 3%? It really doesn't matter that much. The point, though, is that it really wasn't primarily due to increases in the money supply, but primarily due to supply side problems. In terms of the budget deficit, well, thankfully, the U.S. dollar is the key currency in the world. By being the key and dominant currency in the world, it means that the United States government is able, and all United States banks and others are able to borrow very cheaply. People all over the world want to lend to the United States, and as a result of that, the level of debt that the United States have is not excessive, not extremely high, but it's really quite serviceable. Now, if something were to happen to disrupt the dollar's role, that would make it much more difficult for the U.S. to grow its economy, sustain its economy, and so forth. So, if you were to tell me that you think Bitcoin is going to be a real competitor for the U.S. dollar in global markets, then I would say to you, well, that if that were to happen, that actually would disrupt the U.S. economy, because then the U.S. economy would not be able to borrow as much abroad, would not be able to sustain the rapid economic growth and low unemployment that the United States has had since the Biden administration has been in office. But I don't think that's going to happen. I don't think the Bitcoin or cryptocurrencies are going to be seen as a substitute for fiat currencies, as a substitute for the dollar globally. I think to the extent to which they thrive, as I suggested, they're going to be seen as an alternative asset class. They're not really going to be seen as currencies. They're going to be seen as an asset class, a way to invest, to speculate, to gamble, but not as a currency. The world is really going to be still on fiat currencies. Now, the central banks, in my view, are almost certainly going to issue central bank digital currencies. Some central banks are already doing that. The Federal Reserve has a number of experiments where it's teamed up with MIT and other institutions to experiment with central bank digital currencies. So I think, just as I said, that the main financial institutions are going to try to take over the whole crypto space. Maybe you're saying they won't be successful. That may be, but that's what they're going to try to do. Similarly, governments are going to try to take over that space in terms of currencies by creating central bank digital currencies. So what we're going to see is some aspects of cryptocurrencies being taken over by the big financial institutions, being taken over by central banks. But there will be space left over for cryptocurrencies and Bitcoin as we know it. They just will not be dominant in these spaces. Is my prediction of this. But I've often been wrong. I always tell my students, I could be wrong. I'm often wrong. And so, you may have a better view of this than I do, but that's my sense of how things are going to evolve.
100%. And I have another question, but just to kind of have a rebuttal to that, I want to say that Bitcoin initially was just trying to replace gold. Of course, gold has been this form of sovereign wealth for thousands of years. The pharaohs have used it, the Romans have used it. It's been around for a long time, and it's also been a strong indicator of sovereign wealth for a long time. Up to recently, Bitcoin, I think its market cap is 1.2 trillion or so. It's surpassed silver. It hasn't surpassed gold. It hasn't surpassed some of the big FANG stocks like Google or Amazon yet. But it's in the works, and only time will tell. But I definitely think in this short amount of time, with the ETF only being out for about 3 months, it's just they're just buying up as much of it as they can, and I think they are trying to dominate the market so that they can kind of charge that later. That I definitely agree with you on that, Gerald. But time will tell. But I definitely think that Bitcoin is coming for a lot of the major players that people thought would never be touched, never could be disrupted, and is slowly becoming the case. But Professor Gerald, I do have another question for you, and it's pertaining to your book because I want to get back to your book. In your book, do you propose any regulatory frameworks that could facilitate the integration of our economic state right now into mainstream finance? Like, is there any regulatory concerns? Like, we talked about the overprinting, and you said that you don't think that that's a reality. Is there any way that there could be an integration of kind of finding a way to settle the inflation, which I think roughly is about 3%? They always give us a percentage. I don't think that's the real percentage. It's probably more like 7 or 8%. You said that that's kind of not really important, but I just wanted to hear your take on from your book. Like, do you see any integration of some kind of regulatory change in the next few years in our state of economics now?
Okay, so I think there are two aspects to your question. One is about inflation. We can come back to that in a minute. But the other thing is about financial regulation. And yes, there has to be changes in financial regulation that will really break up the power centers of finance that are dominating the financial space. And in particular, we can't keep having a system where the financial institutions take enormous risks, get into trouble, and then expect the government and the taxpayers to bail them out. We saw that again about a year ago, almost exactly a year ago, when Silicon Valley Bank went bankrupt. And yes, the government did not bail out the executives directly, but they bailed out all of the depositors. The same thing happened in Signature Bank and Silver Bank, and there all the depositors were bailed out. Those were, in fact, some of those were crypto depositors. We had another problem recently in New York, and the people who own these banks for the most part and who deposit in these banks and take risky bets, they get off scot-free, and the taxpayers pay the bill. And that's why one of the reasons why people are so angry at the government and so angry at the traditional financial system. It just doesn't seem fair, and it's not fair. So what we need to do is, first of all, regulate these financial institutions so that we don't have to bail them out. And that means we have to break up the biggest financial institutions so that they are not too big to fail. And we have to make sure that the executives of these financial institutions, when they make all these risky bets and crash their banks, that they don't get bailed out. Their bonuses get clawed back, their payments get clawed back. If they've been fraudulent, they get put into jail. When the great financial crisis happened, no top executives of these banks were ever put into jail, despite the fact that there was a lot of fraud going on. They were fined, the banks were fined, but these individuals were not. So those are all things that we have to do. Now, yes, I do think there has to be a regulatory framework that allows for more digital and electronic kinds of high DeFi, high-tech financial activity of the type we've been talking about. And it still remains to be seen what is the appropriate type of financial regulation. But number one, it has to demand transparency. We can't keep having these dark corners of financial markets. People don't know how they work. They invest in them, and then the money disappears. Man, that's one thing I wanted to ask you. You keep talking about these platforms, but so many of the platforms have collapsed. People have taken the money and run. If we're going to if we're going to allow these kinds of activities to flourish, we have to have more transparency. We have to have make sure that people understand what they're doing when they're investing in these kinds of things, and we have to have some consequences for people who take the money and run. So there has to be some kind of improved financial regulation for all of these fintech digital platforms. I'm hoping that between the SEC and the Commodities Futures Trading Corporation, the FCC, Commodity Futures Trading Commission, the FPB, Consumer Finance Protection Bureau, etc., that they really develop a framework that will allow people to engage with these kinds of activities while at the same time protecting them and protecting the overall economy. Finally, there's one point I want to raise with you. My book talks about Busting the Bankers Club, Finance for the Rest of Us, talks about quite a bit. A major problem I see with Bitcoin as it is now is the problems it's creating for climate change. The mining system of Bitcoin uses an enormous amount of energy. Much of that energy is produced with fossil fuels, using the amount of energy used by small countries like Iceland or Ireland and so forth. And we have a climate crisis that we have to deal with. If we don't deal with our climate crisis, none of this is going to matter. None of this that we're talking about is going to matter one bit. So a big beef I have with Bitcoin is that it's contributing to our climate crisis because of the mining process. And maybe you can tell me that I shouldn't worry about that, or maybe you can tell me that it's going to move to a different structure of mining, like Ethereum or something like that, a proof of concept or proof of stake, and it's going to help solve this problem. But the way it is now, it's creating, I think, a major problem in terms of the climate.
Yeah, I think there's a lot of disinformation when it comes to climate change, just on both fronts, whether it's in the mining space when it comes to Bitcoin or just in the actual traditional space when it comes to climate change. So you have organizations like sustainable Bitcoin mining. You have Bitcoin Policy Institute. There's a lot of institutions out there that are really educating people on the FUD and debunking the climate change issues. But Gerald, I'll kind of delve into this briefly because I still want a couple questions to go over with you. But contrary to popular belief, a lot of the crypto industry, Bitcoin mining industry is pretty sustainable. You have initiatives like the Crypto Climate Accord. You have PI, which is Bitcoin Policy Institute. Those are places that people can definitely go to their website, look at some of the case studies that they have. They have really smart people. Go is a perfect example. She worked for NASA. She's now really into Bitcoin. She's showing the world that Bitcoin is green and that a lot of these mining facilities, some of them may be using, coal or some of these other CO2 emissive kind of protocols, but a lot of them are using solar, a lot of them are using wind, a lot of them are using hydropower to actually mine the Bitcoin, which a lot of people don't know about because it doesn't get a lot of airtime. But what does hold true about Bitcoin mining is that it does require a substantial amount of energy, but that's just a part of the protocol, right? As we get more in tune with artificial intelligence, more in tune with some of these other high producing energy machines that we have, whether it's computers or miners, it's just natural progression that we're going to actually use more energy. A lot of the companies, ASIC, being an example, there's a company called ASIC that mines Bitcoin. The narrative that they have is that, crypto mining might inherently cause power outages or they use more energy than Sweden. And there's all these different like stats, right? And, I want to give some pushback on that because, 39% or 40% of, the Bitcoin mining facilities right now are using renewable energy sources. So that's kind of challenging the notion that crypto mining is detrimental to the environment. It's also essential to really think about some of the outdated information or the failure to kind of keep, the educational system up to date with the rapid advancements of mining technology that improve energy efficiency, right? You're talking about the chips market. A lot of the chips that are being used in these ASIC miners are very high heat producing, which is actually being utilized in other ways, right? So if you have a miner in your house or you have a mining facility, you can actually offset heating costs by using those miners to heat your home, heat your facility, your water tank. There's all these different elements of the mining industry that just goes above and beyond just emitting CO2 and causing greenhouse gases. And I think that I would implore you, Professor Gerald, to dig into some of those case studies that really show, people that have come into the space, tested out Bitcoin mining, sees where it's gone, and say like, okay, does this really emit a lot of CO2? Is this doing more harm to the environment than good? And there's case studies out there when you look at countries like China, for example, they did like a full assessment of Bitcoin's overall energy consumption and environmental footprint. And if you look at the results, you'll be like completely blown away because, a lot of like weird stuff comes out of China and they're not always accurate. But China actually banned Bitcoin a few years ago and they kind of had to like recant it because they realized that the moment that they banned it, the network and all the energy to the protocol just went to somewhere else. And the US ended up actually grabbing up a lot of that energy. When you look at Texas, Texas has a lot of free open grid sources, and they have a lot of miners down there, like Riot, for example, and they're mining Bitcoin every day. They're helping communities. They're actually giving back free energy to those communities when they have an overload. So there's definitely a lot of things in the space that you would find insightful that you could read on that would really show you that, contrary to belief, that the Bitcoin mining industry is not as unsustainable as people think it is.
So I just to very quickly go back. So I think what we really need is a national assessment of this issue. So we can really be clear on what are the facts, what are the fantasies, and so forth. I'd really like to see that happen. A judge in Texas recently ruled that the government cannot monitor energy use in Bitcoin mining, that would bring too much harm to the industry. I think that's a fundamental mistake. I think we need to get these data out in the public so people can really figure out what's true and what's fiction, and so that the public can make an assessment of this. I wonder if you agree with that.
Sort of, right? I definitely think that there has to be a little bit more oversight, but I want to say that a lot of the mining companies, especially in Texas in particular, people like Natalie Sklemensky, there's a lot of people in the space that are really in tune with mining. that goes down in Houston every year called Empower, where all the biggest and best Bitcoin miners come.
All I said was we just need to get the facts. I'm not saying anything about need to regulate it and so forth. The first thing we need to do is actually collect the facts on all of these issues of energy use and CO2 and so forth. Shouldn't we, don't you think we should get the facts?
Yeah, we definitely should get the facts, and the facts are out there though. That's what I'm saying. Like companies like the Bitcoin Policy Institute, they literally work on this every single day. They are in tune with the miners. They know what the outputs are, and they're actually giving out this data so people can like observe it and read it. I'll send you a link to this stuff so you
Okay,
can have
great,
some validity there. Validity
great.
there. But yes, there is reports out there. It's not as big as it should be for sure. I don't think the government has complete oversight, but for those in the know that want to find out, there's definitely data out there that talks about that.
Okay, thank you.
Most definitely. Mr. Gerald, so I want to talk more about your book, of course. Your book talks about the challenges and the notions of finance and banking. What resistance or pushback have you encountered from the traditional financial institutions about how your book could change communities that relate to these challenges?
Well, one of the proposals I have in the book, the last section of the book, Busting the Bankers Club: Finance for the Rest of Us, is the idea of having more public banking. That is, more banking that's not primarily for profit, but to serve the community. These can be government owned banks or government invested banks, but they can also be public-private partnerships. They can be cooperative banks and so forth. And these can be run by the community, by the stakeholders in the community, and provide credit for important community needs. So, for example, affordable housing, small business loans, funding cooperatives, and so forth. Now, for these kinds of financial institutions to thrive and survive and grow to scale, um, we need to have a government framework to support them. The Federal Reserve and the Treasury Department, we talked about this, they've given out trillions of dollars of financial subsidies and aid to the big banks and the major financial institutions. But they've given very little support to these smaller community banks, public banks, and so forth. So what we need is a financial system at the federal level that supports a, a broader array of types of financial institutions to support communities. Now, in some ways, this is consistent with your idea about a decentralized system, Bitcoin and so forth. But what I'm arguing for is more traditional financial institutions, but financial institutions that are run by the community, support the community, and not just in order to make profits, but to serve social needs. And there's been a lot of pushback from the banks about these public banking proposals. There's public banking initiatives by grassroots groups in California and Massachusetts, in 22 states across the country. And it's almost always the case that the traditional banks say these are inefficient, we don't need them, they're going to be sources of uh, political manipulation and so forth. And so there's been a lot of pushback against this. There's also a lot of pushback from my proposals and others' proposals for breaking up the big banks. Of course, the big banks don't want that. So there's been a lot of pushback from that. In fact, there's been almost no support from the big financial institutions for any of the proposals that I talk about in my book. Now, let me be clear. I didn't make up these proposals. What I did is I interviewed activists and what I call the bank busters, the club busters, the people who are active in this space trying to reform the financial system, people like the Americans for Financial Reform, Better Markets, these grassroots public banking advocates. I talked with many of them, we interviewed many of them. And so the last part of my book are proposals not that I came up with on my own, but that collated a lot of the ideas that these activists and other experts have who are the club busters. So I'm really promoting those ideas.
Nice, nice. I like that. And the U.S. is kind of like the big elephant in the room when it comes to finance, and I want to talk about your global approach on finance. So, does your book address the implication of this globalized kind of way of approaching finance? And do you think that that will resonate with individuals from different economic backgrounds and geographic locations? Because I think when you talk about the US dollar or you talk about the economy of the US outside of the Americas, a lot of people just assume that the US dollar is the most, biggest currency out there, which in a lot of senses it is. And they don't look at the economic versions or the economic implications of what we deal with as US citizens. So I wanted to know if your book kind of addresses any of those global finance implications that are out there.
Yeah, it's a great question. Very unfortunately, this particular book really is focused on the United States. And as you said at the beginning, I've done a lot of work on other financial systems in other countries and international finance. But this book is really my attempt to really talk about the U.S. financial system. However, what I will say is that we in the United States have a lot to learn from financial institutions, financial policies around the world. We in the United States often think the way we do things is the best, and we don't have to learn from anybody else. But if you look around the world, for example, there are lots of public financial institutions, development banks, community financial institutions, and so forth, that work very well for those economies in Germany and in Sweden and in Brazil and in many other places. So one of the next things I'm hoping to do is write more about financial systems in other countries and how in some ways that they're better than ours, how in some ways they're not as good as ours, and where so we can learn from each other. So I really applaud the question. The United States is not the only country in the world, and the world is getting bigger, and the United States is getting to be a smaller part of the world, and so we have a lot to learn from the rest of the world.
Yes, 100%. And Gerald, this is my last question for you. What do you envision as the future of finance, particularly in the light of the ideas presented in your book and the ongoing evolution of technologies like Bitcoin, blockchain? How might the financial landscape look different in the years to come?
Well, I think it's really going to depend on and how to what extent we educate ourselves on how finance works. The extent to which we, as people and as communities, really try to grab the bull by the horns, really try to grab the reins, and not let finance be something that does things to us, but that we get more control over it. And in that sense, I applaud a lot of the people on the ideas in the space that where you're coming from, cryptocurrency, Bitcoin, etc. I've just said, I have a lot of criticisms, but one thing I applaud about it is the idea that this is not something that we should just let happen to us. We should be a more democratic, it should be a more open, should be a system that we all can play a role in. And so I think it completely depends on number one, whether more of us get involved. I want people to become club busters, to get more involved in their community, in financial reform and so forth. You want people to get more involved in Bitcoin and cryptocurrencies, but we both want people to get more involved. If we just sit back and let the big financial institutions dominate things with the help of their friends, their lawyer friends, their economist friends, the government friends, with the help of the bankers club, then the financial system is going to continue to look like it has been. It's going to be mostly for the rich. It's going to crash our economy on a regular basis, and then we're going to have to bail out the big finance. It's going to continue more or less like it has been, and I don't think that's really sustainable either politically or economically for the rest of us.
Yes, I agree with that. And Professor Gerald, this has been a great, great conversation. I want people to really look into your book and look at the concepts. I know I'm a bookworm, so I love economics. I love learning about some of the traditional aspects of the space. I mean, there's still stuff that I have to learn, right? Like, I'm a millennial, so our generation still has a lot to learn about finance. So
All the generations do.
exactly, yes. And I'll definitely be buying your book and reading it and passing it along to other people. But before we go, could you tell people where to get your book, how they can get in contact with you, and if you have any social media stuff you want to push out?
Yeah, so to get my book, you can get it from any normal source. You can go to the University of California Press. You can go to independent bookstores online, or if you have an independent bookstore in your community, and you can find me at the www.perry.umass.edu. That's www.peri.umass.edu. And I look forward to continuing our conversation. It's been great.
Yes, likewise. And once again, thank you for being on the Bitcoin Source. I really enjoyed kind of battling it out with a OG traditional economist about Bitcoin. I really enjoyed the conversation. So thank you,
Me too.
Professor Gerald.